G'day folks, Jim here from FX Charts, 30th of January, thanks for tuning in. Well, the Fed did pretty much as expected today. They tapered by another 10 billion. Although the effect on the market was rather muted really. Earlier in the day, following the Turkish central bank rate rise, when the yen and the Swiss franc lost some of their ground, but they regained it back as the markets continue to worry about what's going to happen in the emerging markets. US stocks closed on their lows. But the outcome from the Fed was fairly benign, really, and quite honestly, the euro and the European majors have really done very little. We'll go and have a look at the charts. On the in the euro, really, we're continuing this choppy sideways trade. We did get down. We had a brief spike down to 136, the figure, which is this is an hourly chart that just held the 100-day moving average, which I'll show you in a second. But realistically, it looks as though this could continue for a while. The charts are completely flat. The 4 hourlies are not really much better. They're coming back to sort of fairly neutral territory. And the dailies, as I say, they held the 100-day moving average. If we do break there, we could go down and have a look at this sort of 135, 40, 50 area. I don't really think we're going to do that today. The market's still digesting the outcome of the FOMC decision, and I suspect that we're probably going to have a fairly choppy session, probably with the euro probably largely dominated by trade in the crosses, particularly from the yen, which is moving around. If we move forward to the yen, now it got up to a high of 103.40 after the Turkish rate rise yesterday. It's since lost all that ground. We'll blow that up a little bit. It's since lost all that ground. It got down to about 102. It's been down to 101.85, actually holding on to this 38.2 FIBO support, and it's back at 102.30. It looks to me as though the downside momentum on the 4 hourly charts is running out of steam a little bit, so I think we're going to chop around between sort of 10. Well, I guess what the day's low, we could see that again, 101.85. I don't think so, and possibly back up towards the high 102s. The daily charts, though, continuing to look as though they've got some negative momentum. And if we do break this rising trend line, which is about 101.65, the next support really is the 100-day moving average down at 101, and then the 200-day at 100. We're not going there for a little while, but it looks to be the direction of it to me. Cable, very little to say on cable. It's just mucking about, going nowhere. It did reach 166 again overnight, and then headed lower, but it's really just consolidating. The 4 hour charts look a little bit negative, but not really doing anything very much. The dailies, we're still in this uptrend as we have been for a while now, but as I keep on saying, you know, the negative momentum makes me a little bit worried, and if we can break this major support line eventually, which we're not going to do today, I don't think, but if we do end up breaking it, we could have a fair bit lower, back down towards the sort of 162.5 level. But for the meantime, 165, 166 looks like it's going to cover it. Dollar Swiss equally, that's just chopping around, not doing an awful lot, not an awful lot to say. I think there's we could get another test down at 89, particularly if the emerging markets continue to suffer, and I think possibly watch the equity markets. If the S&P breaks lower, then we might see some pressure come on dollar Swiss again. But otherwise, we could get another drift back up to the high, sort of 90, the figure 90.10 area where it's been for it got up to yesterday. Further out, the dailies, they look a little bit negative, but they're not really showing us much in either direction, so I wouldn't get too fussed either way. The Aussies, that consolidated, it got up to 82.25 again after that Turkish rate rise. Risk assets came back into vogue. That didn't last long, and it's been back down to sort of 87.25, and I think probably today 87 to 87.75 covers it. Now we have got the Chinese Hong Kong Bank Chinese Manufacturing PMI due later on today. Now, if that comes in under 50, which is expected to do at about 49.6 according to the flash number last week, then we could see the pressure come back on the Aussie, and for a drop below this 87 level, back down, and we could go to sort of 86 and 3/4, 86.60, somewhere around there. But we need to wait for the data to come out before we see any real movement. The Kiwi, that's been more interesting. Now the RBNZ's left rates unchanged. I think the market was called a little bit long, hoping for a rise, but it didn't come about, and the Kiwi immediately fell down to 81 3/4. We're back at this 82, the figure level now. Now this FIBO support, near-term FIBO support, should continue to hold it. That's at around 81.60. Beyond there, the daily moving average, the 200-day moving average is at sort of 81.40. So that 81.30.40 I think is going to be strong support. The daily charts are not looking. They're possibly slightly negative, but they haven't got any real momentum behind them. And I suspect that we're now probably in a slightly lower range. We keep on making these lower highs, so I wouldn't be surprised of 81 3/4 to 82 3/4 to cover it for the next day or so, with the caveat that if the Chinese PMI is soft today, we are going to see the Kiwi dragged down by a lower Aussie. Now, while we're here, I'll just have a look at the Standard & Poor's, the US index. Now, that's beginning to look pretty sick to me. It has come off its highs. It got up to this 1840 level, 1845 area last week. Now it's finished right on its lows. If we go back and look at the 4-hour chart here, currently holding on to support here at 1770. This is the first of many sort of FIBO levels really, but it's holding on to this. Now a break of that, and we did close on the lows, I think probably comes back to test this rising trend line and the 50% pivot of around 1740. A break below there would have more significant ramifications, I think, and possibly head back towards 1700. But the 4-hour charts at the moment, not really suggesting it's time to get overly short. Maybe yesterday's rally up to 1800 after that Turkish rate rise was it. But I suspect we've got some more choppy trade with the outlook for the longer term being a break of this 100-day moving average, which is here at around 1765. As I say, back down to meet the rising trend line at about 1740, and the 200-day moving average, is about 1703.05, something like that. As I say, the dailies are pointing lower, and also the weeklies, which have been hanging on, clinging on for weeks and weeks really. They now look as though they've actually got some momentum on the downside. So if anything, I'd be playing the US index from the short side, particularly as it looks as though tapering is going to continue by $10 billion a month, and then slowly be phased out by the end of the year. Anyway, that's about it for today. Nearer home, we've got, what have we got? The German CPI and the US GDP today. They're going to be the highlights. We've also got the jobless claims, and of course before them the Hong Kong bank Chinese manufacturing data. So keep an eye out for that. 49.6 is the expectation. Anything below that would see the pressure come back onto the Aussie. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.